Hi everyone, thank you for being here with us today at this Blockchain at HEC webinar. So this is an Ask Me Anything with Gaspard Peduzzi, the co-founder of APWine. I'm Jérémie Zarka, a member of the Blockchain at HEC core team. Blockchain at HEC was created in 2017 to share knowledge on Web3 domain, the blockchain, cryptocurrencies, and also to connect the ecosystems. Tonight, I will be moderating this webinar, this Ask Me Anything webinar with Gaspard, with the help of Athan, who is a current student at HEC, involved in Web3 and also a fan of DeFi. On behalf of Blockchain at HEC, I would like to thank our prime sponsor, PwC and Stake Capital Group, and our partners, HEC Alumni, HEC Paris, and all the 80 speakers and startups and other corporates who have contributed to share their lights on Web3 universe. I remind you that Blockchain HEC, at Blockchain HEC, we organize several events per month, and we have posted a great lineup for the month of October. So we are very happy to welcome Gaspard tonight, co-founder and CEO of APWine. And so Gaspard, the floor is yours. If you want to introduce yourself and introduce your great company, that would be super.
Definitely. Thank you for the introduction, everyone. Yeah, my name is Gaspard Peduzzi. I'm French. I'm living in Switzerland. I've been studying computer science there before starting APWine in August 2020 with 3 other co-founders that were also EPFL students. I was working in crypto and DeFi for quite a bit of time, doing mostly research or community thing before, and eventually started this DeFi protocol back in August 2020. It has been a crazy journey, still is. Obviously, it changes a lot, not the vision, but the way we work toward the vision, the team, everything. So very happy to be able to answer to any question today related to that. I will share my screen very quickly with a simple intro about what is APWine. And then I will be ready to answer any kind of question. Assuming everyone has a general idea about what DeFi is and with previous intervenants and speakers and people that presented different kind of DeFi protocol, it's important to start back at when we started, which stage DeFi was. And DeFi was booming, like it was a DeFi summer, as we call it. So a lot of new protocol starting, like being deployed in a very kind of extremely volatile situation, volatile for the protocol and the liquidity that were on it, because a lot of hacks, lots of flash loan that were like a typical exploit back at the time, but also crazy APIs due to a lot of different parameters. They were due to incentives, additional incentives added on top of liquidity pools to incentivize liquidity there, but also low TVL for high volume as well, so high volume usage, lots of different factors, not much stability. And we had all that volatility, but no way of hedging your risk on that volatility. So if you were taking advantage of this yield, of generating interest in some ways, you had no tool to hedge your risk there. And you had no tool to be able to speculate on what will be the yield tomorrow or in a month or in a year, even though people were kind of speculating on what will be the general landscape. And actually, since then, we've seen a lot of volatility in the space, a lot of volatility in the interest rate, sometimes related to market conditions, sometimes related to other factors. And but by then, we then had the idea of creating a protocol of derivatives that would allow one to speculate on those interest rates. So that was the context, and that's where APWine came into places. The question was, how are we going to enable that? We want to build a decentralized protocol, something that we want to provide autonomous smart contract that will allow people that are interacting with those DeFi protocols to then hedge their risk, sell their yield, to trade that yield. And the primitive that we created was called yield tokenization. Mainly, and very simply, we decided to tokenize the yield, and I'm going to explain how we did that exactly in the next slide. First, that was like the first beta version 3 years ago, since like a long time. And those were the first features on Yield. So we integrated a few platforms, Aave, Yearn, Harvest, and I think other ones actually. And we enabled people to go there, provide liquidity, and basically with an order book fashion, they were able to sell the yield for a month. So we started with that product. It was February 2021. We had the alpha variant tested before. And then we iterated and conducted research on like almost a year before we were actually able to go from 0 to 1 and propose the first V1 product that is still currently live. So how it works, very simply. When you interact with the DeFi protocol, in most of the cases, you have pools of vaults and you deposit liquidity on those pools, those vaults. You get a token back. This token represents the ownership of the liquidity that you deposited in the underlying protocol. And that token is called interest-bearing token asset. By holding this token, it represents the liquidity that you deposit in the vault, and as such, your position is increasing in value in most of the cases because this position is generating interest. So we take that asset and we split it in two. We split it into a token that we call principal token that represents the initial deposit. So you were on Aave, you deposited 1,000 DAI, you have 1,000 principal tokens. But you also have 1,000 future tokens. And those were basically token encapsulating the yield. So we have your deposit and we have the yield. And once we have those two tokens, well, you can actually sell your yield. You can exchange it. Someone can buy it if they want to gain leverage exposure on them. And if you want to hedge your risk and the volatility, if you sell your yield at a fixed rate, then eventually, no matter what the market will be, no matter if this rate will go up or down in value compared to the price you sold it. So you hedged your risk there. That was a very simple idea. I'd be happy to go more in details and so much changes that came into places then while designing something like that, and to just basic path, and then that was the V1. So basically we started to launch in a permissioned way, so voted through governance, just a few pools and a few protocols. So for different assets like stake Aave, like ETH deposited on Lido, so stake ETH, USDC and TrueFi, and a lot of other protocol actually. And we have I think at the moment between several dozens of pools live on 3 different networks. So mainnet, Polygon, and Arbitrum. And so we started with that product. We had a first version of the UI and the protocol in December 2021. Since then, for over a year, we iterated a lot, added a lot of functionalities, but basically the concept of you can deposit an APWine and sell your yield or buy yield or get fixed rate was enabled from 0 to 1. We are now working on a completely new version, refactoring a lot of things, removing all the pain points in terms of product UX, that to go in a much more concrete product-led approach to have just a much more efficient market and bigger user base. So that was the market for new primitive, and for the first time, people were able to. The yield that was indicated by, let's say, Paladin, Lido, Pathwap, or TrueFi website had a different meaning because you actually had a market for this interest rate. So the question, what is going to be my yield tomorrow, had a different meaning because it had a value and can be traded. It was no longer about just, if you wake up and you see a different yield, then you need to move your liquidity somewhere else. And of course, that market is much more in the traditional financial world. It's a huge market, interest market. It's the price of liquidity. There are positive interest, debt, a lot of dynamics there. And as DeFi matures, that's something that goes with it for sure. It's a market for interest rate. Because we're building a DeFi protocol, it also meant that we had a few products, a few things, simple actions that DeFi users were able to do. So getting fixed rate, for example, they were buying locked asset locked for a fixed duration, but it was a fixed amount of collateral. And so they were buying that at a discount and getting fixed rates on those. It was a way of hedging the risk for the liquidity providers, getting more capital efficiency as well. For example, we worked with DAO that is producing stablecoins collateralized by locked assets, so more efficiency there as well. We worked with protocol providing other types of financial derivatives like options, and them as well. We are able to collaterate this position with assets that at small costs, like principal tokens. I mean, different kind of thing, different kind of vault, different kind of strategies. Those were the very first thing that were the first usage of APWine, and on some aspect, product that we worked on and pushed them to another level. So yeah, that was an example of fixed rates. Basically, you would go on APWine and you would buy a fixed amount of collateral that would be locked for a fixed duration, and then you would be able to compute a fixed rate that would be gained on that discount. If it's a fixed rate, we had some kind of analogy to advanced paycheck mechanism for yield for liquidity provider, because they were able to, let's say that you have a need for cash, you're DAO, but you have a lot of funds and you're currently leveraging those funds to get yield on top of those. Then you would be able to go on APWine and you would sell your yield in advance for that position. And maybe with the cash that you have in advance, you can engage in different activities. I don't know, bounty, different kind of thing. It's also important to notice that we integrate a DeFi product, but we worked with other actors integrating other types of interest generating assets. Yeah, that was a very short introduction. I wanted to keep it short just to be able to focus more on the question or anything. Very happy to deep dive on any kind of aspect that you would like me to do. To deep dive.
Thanks a lot. That's super interesting. So what we've decided to do for this webinar is to divide the next section where we will ask you questions and where the audience will be able to ask you questions into 4 sections. So the first one will be about a chapter on APWine itself, the company itself, the team, and so on. A second chapter on the market. A third chapter on financing your venture, and a fourth chapter on the DeFi landscape. And you talked about a bit about the DeFi summer and the bear market we're currently in. And so all of those topics we will address at the end of the webinar. So let me ask you maybe the first question on the first chapter about APWine. So what is your business model and what is the problem you are trying to solve?
Problem, starting with the end, because I'm an engineer by heart. The problem that we try to solve is creating an explicit interest market. There was no explicit yield market, meaning people were speculating, but had no ways of actually speculating, like exchange value on those interest rates, and that's what we tackled. So that's the pain point that we're trying to solve. And the business model is we create the tools, the protocol that is allowing one to generate the derivatives needed to be able to trade those interest rates, hence creating that explicit yield market. So business model can mean several things. I think that we can deep dive more into how everything is structured from a business perspective as well. As often in DeFi, you start with a core team of people building towards a vision, trying to build something, and eventually, as things grow, if you build a decentralized protocol, you have other challenges. You have the challenges of decentralization. That is basically the first one, because you build something as a team of 4 students initially. Then you don't want to have the ownership of the protocol. You want to have a community of people that participate into the development of the protocol, and the iteration, the user base, the community, and that's very important. That's the 0 to 1 in terms of decentralized protocol. You're not a decentralized protocol if it's just something on the blockchain but run by the team. And for that to be enabled, you need to have revenue mechanism integrated in the protocol. You need to have incentives. You need to have generate inertia that creates that scarcity around governance power on your protocol, and you need to leverage the network effect of your protocol as well, how it is integrated and how other protocols are depending on it as well. And on the other side, you have a team of people that need to be paid, that needs to be managed. And they have all the that have in traditional companies, and eventually you have something that goes more in the research and development side, and that has a particular interest in particular revenues. And on the other side, you have the DAOs that works in a different fashion as well. We've seen different kind of setup. I think in DeFi, you have sometimes association, you have an independent group of developers like Bored Ghost developers. I think so BGD Labs for Aave, and you have the Aave companies as well. A lot of different setup. just a matter of how you structure everything.
I'll take the second question. Well, you briefly touched on some specific aspect of the business, like where do you generate revenue, like your revenue streams, and the DAOs that that on the other side, which to manage community and make decisions and help builders to incorporate builders into the ecosystem. So my question would be, what is your strategy in terms of DAOs, and what will be your main revenue streams?
The strategy first, decentralization and the setting up of one DAO and even several DAOs for one project is progressive, and is a progressive process, and decentralization is a relative concept. Meaning that we started with kind of a very centralized approach. Of course, we built something, we launched it, and we still have actually a multi-signature wallet that is owning the ownership right of the protocol. If we want to do an upgrade or have something that would be considered as admin rights, it's a link to that multi-signature wallet. So it has to be done manually, and that was how we started. Then we started to launch different kind of, we launched a tokenomics, and we launched a different kind of mechanism close to the curve model with the boost and everything. And there we introduced governance framework, basically somewhat something that could be compared to company status. So like different types of proposal that have different stakes, different level of importance as well. And related to each of those proposals, we had different voting lengths, discussion period, that kind of thing, a threshold. So that governance framework is basically the status of the DAO, and we published it, we voted it, we discussed it with the community, and also agree on it. Then now we're following that. So the decision is still enforced manually through that multi-sig wallet, but we're following what is decided in a decentralized way, mostly through snapshot voting. So that's the first step. We are going to publish actually very soon some kind of decentralization roadmap, but what I can mention already is the next step is having this decision being executed automatically, but with some kind of guardian mechanism, that has been a very popular paradigm in decentralized governance. So even Aave is doing that, like you have all these processes that are working in this way, but you still have some kind of guardian that can intervene in particular situation, because you don't want to be stuck, even if there are some kind of consensus or some things that could be verified in different ways. So more veto kind of approach to the limited guardians. And then, yeah, eventually moving towards more decentralization there. So that's for how you mostly security aspect and how you decentralize those rights. In terms of structure, we have what we can call the DAO of APWine, like mostly the token holders. They are defined in this initial governance framework. So they have to have different conditions. The goal is to have different DAOs, like a grand DAOs, like a security DAO. And the different DAO would work like association with a different purpose, defined purpose, and a different way of functioning. And that's something also that we're setting up now from a technical and level perspective, but also, as I was mentioning, it's a progressive process. So we need to wait for different milestones to be able to, for those DAO or for those steps to be reached. Otherwise, it would not make sense or be efficient at different stages.
So I'll take the next question. So we will ask the question coming from the audience. There is one coming from Gerard. If you provide a fixed rate to a user for a period, who takes the risk that rates move over the period, or how it is hedged?
Yeah, that's a very good question. And when you build a decentralized protocol, you need to build something that is like working in every situation, but even that is not necessarily a true statement. But mostly, APWine is actually not granting anything. It's not taking the risk for someone else, that kind of thing. But you need to build something that works in a decentralized fashion with Byzantine actor as well, and that will be solvent and works in different kind of conditions. You should be able to be stress tested. For us, it's very simple, actually. We tokenize things that exist and that are realized. And then it's just about, if you create a future on yield, basically. So when I took the example initially of presentation where you deposit some DAI on Aave and then you have the token, if you sell your FYTs, whoever will have these FYTs at the expiration of the future will be able to claim the yield, whatever it is that is generated by initial deposit. So if the yield is more than what you paid for, you made a profit. If the rate is actually lower than what you expected, then you're taking a loss. It's just you're getting what is realized, and the other person that sold their yield in advance, they already got your money for it, so they already know which profit they make on this yield. So to sum it up more clearly, the person that is buying the variable rates are the person that will end up with whatever the rate is, and they're the one taking the loss if the rate is lower, for example, than what they expected.
It's very interesting. Another question on another topic. So where would be the IP of your service, and is everything open source, and will it be open source in the future?
Very interesting question, because on the one hand, yes, everything is open source. We are building internally. Things are not shared while we're building them, but once we release them on mainnet, contracts are verified, and we even create repos where we publish everything. We even add bounties on them and that kind of thing. So we try to have every component of the stack, front end to smart contract that is open source. It's not actually completely true for the front end, because it's actually quite complex, but it's part of a roadmap to have an interface that everyone can run, an interface that can be decentralized. In terms of IT, there are many components of the stack, and we're working with some project and even ideas that would be we would have I forget the English term, but yeah, anyway, we would have intellectual properties and some concepts that we developed. The smart contract are actually under business license. So it was something that was discussed a lot when Uniswap pushed it. It's now not at all the only protocol doing it. Aave did it, and actually a lot of other protocol. It means that even if it's open source, if someone wants to reuse that code, they basically need to ask the permission for a defined amount of time. So that's for the protocol, what is live. And then internally, we developed a lot of technologies that were needed to be able to interact on that completely new market. And because also in terms of development and everything, you don't have already all the tools existing. Part of that technology will be constructed as product, and part of that technology will just be released open source for everyone to be able to use it.
Very interesting. So we'll switch to the next section about the market. And we have a question from the audience, from Nicolas. How would you compare with Bound Bridge protocol?
I'd actually released several versions, and some things changed by then. But from what I had initially in mind, they were doing mostly fixed rate in a quite different way. They were not tokenizing the yield as we were doing. And so it was quite different. So to be fair, fixed rate actually, where it's a term that is used for a lot of different things that are completely different. For example, Aave is allowing fixed rate borrowing and lending, that kind of thing, but it works with liquidation. It's actually not the same thing at all. So yeah, Bound Bridge, I think, was doing that. They were doing bonds as well, that in some ways could be a bit similar to APWine, but eventually the tokenization of the yield that we do is something completely different. We mostly focus on that aspect.
Sounds good. Very interesting. Just a follow-up question to that one. So what's the competitive landscape looking like right now in this subsector of DeFi, and how do you position APWine among them? So
we started 2 years ago, and back then the only thing that you had was, for example, Aave saying they have fixed rate, which was a completely different thing than we were proposing. Or you actually had also protocols like Alchemix, loan repaying them, stuff, that kind of thing. And we were investors or people in the community were always comparing us to that, but it was actually a very different product. And since then, we had actually a lot of other protocol starting doing something quite similar. So yield tokenization with PT and FYTs, those two tokens that we created, they were actually doing more or less the same thing. Then those tokens had different dynamics, and the market that they were creating for the liquidity of those tokens were actually working in quite different ways. I would say that today from that subset of protocols, we mostly have, for example, Element. We had Element and Tempus. Tempus actually pivoted quite a lot recently and since this summer. And Element actually is still doing more or less the yield tokenization in a bit different way because they were focusing on the fixed rate. So they were focusing on the liquidity and the usage of what is then the principal token once you tokenize and split an interest-bearing token in two parts. We also have that functionality, but the vision is mostly to focus on any kind of derivatives related to the variable rate. It's to provide the initial vision was to be able to speculate on the variation of the yield. That's mostly captured on that part. We also have other types of projects that are trying to find an actually novel approach there, like timeless thoughts, doing synthetics, doing like interest rate swaps, or like tokens that are not that would not know which standard name to give them, but work in different ways to be able to capture yield volatility, for example, or hedge that. So it's something that is addressed a lot. I would say that there are no product at this stage, including ourselves, that managed to get like a lot of liquidity, stable liquidity there. It's still a very complicated challenge to find the right product, the right UX to have to connect the user to the functionalities to tackle the initial pain point that they had. So yeah, that's a bit the landscape. So a few yield tokenization protocol, and then a few other projects trying to do things completely different, but mostly around interest rate swaps and synthetics on what we do.
So you mentioned a bit about the DeFi summer in your presentation, the fact that everything was crazy at this time, including the APWines. How does the bear market impact you, your competitive landscape, and the way you run a company?
So on the management company side, so we hosted actually an event in Paris last week, and I had a discussion with a few other founders. That was actually the goal of this event, to be able to exchange, between friends, between people working in a DeFi protocol and different market conditions as well. I don't think it's necessarily related to DeFi or crypto in general, but for sure, it's different. It's a different thing to build a company in a very much bull market like everyone had in 2021, in a bear market like we had, especially in the beginning of the year, result of events, or maybe before March 2020, but we were not there already. It's different because if you want to raise money, you have to time it. It's different because if you want to launch a product, you have to time it. It's different because the job market is completely different as well. Like you hiring a Solidity developer right in the middle of a bull market is a crazy thing to do because they know the opportunity cost that they represent. They are quite scarce, and so the salary are like as volatile as actually the market itself. So that part, reaching stability is harder in the bull market because you want to have audits, you want to launch things. It's harder to, like, everything is scarce in terms of resources that you can buy. But on the other hand, you get much more money, everything goes up and that kind of thing. In the bear market, you have much more stability. It's way easier to build a stable team, to recruit people, to meet people, less noise. It's actually very comforting and a fertile environment to be able to build things. And when we look back at several cycles back and all the time in a bull market, you have your project, everything is rising, but the real innovation, they happen in between those bull market. That's there that you actually have the time to focus on different subjects, to take the time to build it. It's less about making noise. It's more about building something that eventually will make noise by itself. And so things work with cycle. In crypto, maybe more than other market, and it's a very different landscape. But I would say that the bear market, as we call it, like the last months, is actually very different from what we had like two cycles ago. And even now, when things are more or less down, then you actually have a lot of community events. Events are still full. You have a lot of people interested in joining the space, and that's actually a very, very good thing. In terms of competitive landscape, then it's not changing a lot. I would say that in a bull market, you have a lot of projects that will be doing just what you do because it's easy to to raise money in any case. It's easy to launch a token and get traction. So it's easy money for them just to copy something that was existing. In the bear market, you have more innovation, but you have less of that as well. And sometimes you have competition that disappear because they don't have funds anymore. It's harder to survive, of course. But on the other end, every project that managed those things correctly, they're still there and building. And some of them are choosing to change and pivot, like Tempest did a bit recently.
Sounds good. Really liked your take on how to operate through the bear market. So we're gonna switch topic to financing. So we are just curious, how did you secure your first and, well, obviously follow-up investors, and who are they?
To tell about a little bit again, the context, we were students at EPFL when we started, and it is still our first company. So we had that idea. We started to build a little bit everything, and then we figure out like, okay, so eventually we'll have a token, and eventually we'll deploy things on mainnet. So we'll have user funds there, and we create a website, and we didn't want it to be anonymous as well. So first thing that you need to have is lawyers and auditors, which represent the cost. So we discussed with people we knew, and we found one person that in a very short amount of time wanted to help us and provided initial funds. It was a very small pre-seed. It was Julien Bouteloup that you know from Stake Capital, and because he's very known in helping a lot of projects as well. And he was of a great support because of that initial pre-seed and because of all the advice and the help he provided for us to be able to exist. So that was a really necessary help, and that was the first pre-seed, very small amount of money. Enough for us to have our first study, to set up the company structure, to have the lawyers helping us. So then quickly we were able to launch a beta version, and it was February 2021. We did a seed round, a small seed round. I mean, small at the time. It was 1 million. It was raised through SAFT. It was basically selling token before they were issued, and it was done with many investors, mostly builders. We prefer to have a lot of different people that were able to commit a lot of value compared to the funds that they were allocating to the project. It was, I think, one of the best choices that we did for that round. It was very efficient in the end. We had so many calls, we met so many people, we had so many calls with funds as well that eventually we did not end up to take. I have to say still that the round was led by Defi Digital, which is a fund which is very active in the space as well. So yeah, 1 million was a big thing for us at the time. Still is a big thing. It allowed us to scale the project from a beta project until the production product that is still alive today, and actually took another level even. That was in February 2021. Then we did what is liquidity bootstrapping events through Balancer, through the LBP, and that allowed us to raise a few more millions as well. That was in May, if I missed it again, or May 2021. And then we iterated a lot. We launched at V1, and we did a seed extension because we felt that the market was becoming a bit uncertain. We wanted to secure some runway, and we wanted to stabilize the team as well. So not scaling too much, but having additional funds to stabilize the whole thing and being able to build even if the context changes, which happened to be a very good choice because that's exactly what happened. And that's where we are approximately in terms of fundraising today.
Super interesting. And
the
so
the details of that of the seed extension are not public, but it will be published within this month.
Okay, and very good insights. The next question is, what will be the profile of your next investor? Are you looking for a specialized crypto investor or more generalist VCs or investors?
Well, I think at the beginning of building a crypto project, it's important to be surrounded by crypto people. And the reason for that is that the 0 to 1 process, they did it, and it's complicated. It's proper to crypto. It's proper to crypto. It's just, like, if you even talking with lawyers, if you go to regular lawyers, you'll just lose a lot of money and time, and you need to be advised with the person that knows exactly the space and how to navigate through that, especially in the first steps. But while the project is getting in maturity, and while you scale and you scale the team, you scale the project, you scale your users, you have the same problematics that every kind of project. And so I think today it makes sense to have some modesty towards Web2 people and actually benefit from in terms of management, in terms of strategy, in terms of product driven approach. It's very useful to benefit from them. There are some funds that have both this experience and that are in crypto as well. I think those are very relevant. That being said, in terms of profile investor, we will be mostly focused on funds that will have a take in crypto. We'll understand what are what basically we're doing. It's very important that have funds that are actually active in terms of liquidity provision, in terms of connection in the space. While you grow, you have different needs. The compliance needs are not the same at your Series A than what they are at the seed. All those things, basically, we list a lot of aspects that we need help on, and that's how we select funds. We check their profile, we check how close are they to the space, what are they experiencing, where they can bring value, and that's how we decide at the end if we take them or not.
How do you find your customers, and how do you plan to scale?
The 0 to 1 in DeFi, finding customers is actually a rather simple thing. You know, if you're just creating a DeFi protocol, you have a Twitter account and you talk about it, and you have people talking about it, and then you have people coming on your platform that try, they find it interesting or not, they speculate about it as well. That's part of the communication, I think, that we have. And then those are the first user base. How do you scale that is related to how you define your product and your user target as well. Your user target will be moving depending on the stage of the project and the stage of the space as well. The stage of the project, because you cannot have the same users depending on your liquidity, and the stage of the space, because you cannot have the same institutions depending on how much they can interact with DeFi protocols. So for example, now we're talking with funds that are managing liquidity to allocate on DeFi protocols. And APWine is the right tool to be able for them to be able to hedge their risk, or just to speculate or gain leverage exposure on some pools. That's one thing. The more we iterated on the protocol, the more we managed to identify different products that we have and that we want to build. And for each of those products, we have different kind of user base, and we reach towards them in different ways. So I would say that, like, usually people talk on Twitter. You have the crypto and DeFi community that you need to be right there. You need to attend to this event, to do the store, to do this podcast, to manage a Discord where you have all this community interacting. And the network effect in crypto is, I think, the first way of growing the user base. Then you need to do a lot of education, especially if you have a novel or new product that is a new paradigm. It's not just a lending protocol, it's a derivatives protocol, and derivative interest rate. So it's a rather different thing. And eventually, in the product that we're building, we might target more advanced users and more institutional users. And those you meet them at conferences as well, but you meet them through investors as well. That's what they're here for as well, to make those kind of introduction. If they are not the user themselves, which they are sometimes. So yeah, you have a lot of different kind of communication channel, but for now, they are mostly like proper to crypto, I would say.
Just to follow up, a question from Nicola. So are you seeing the liquidity pools as partners or as competitors?
So liquidity pools is a broad concept. It's just we have a liquidity pools, and APWine is built on top of the other protocol. So we need those DeFi protocols that are generating yield. Otherwise, there is no yield market to make it explicit. So we don't see them as competitor. On the opposite, the more liquidity there is in the DeFi market, in DeFi in general, the more interesting we become, and the more mature the project can be as well. So it's definitely a necessary component, because it's the component we plugged on top. Competitors are more like people that will do derivatives on interest rates, and they need as well liquidity. Like every DeFi protocol needs liquidity to work, and then we can see competition in who is getting the liquidity for the same product. But to be fair, at this stage, the liquidity that is allocated to that particular kind of product compared to what it could be, or the general liquidity that we have in DeFi, is too small to consider them as like a threat to protocol. It's like we are not sharing even that part of the cake. It's mostly about how you build the technology and the product that will bring more liquidity, but it's not a question of who has the liquidity at that stage.
Super interesting. So we'll move to the next, to the final section about DeFi. Maybe a broad question is, where do you think DeFi is going? And maybe a more specific is, how do you measure risk in your protocol at market level, and how do you mitigate those risks?
Protocol risk, smart contract risk, is a very inherent thing to DeFi in crypto in general. It's something that is tackled in different ways and in new ways now, but there is a standard process to avoid that kind of risk. The first thing to do is having a right development process, because no matter who with your auditing company, if the code is not documented, if the code is not tested enough, if the environment and the process is not done correctly, then you have way bigger chances to have an issue in your code base. So first, you have to have a correct development process. Then you have to have those audits, external audits, internal audits. You go to companies that it's their job, and they are security researcher, and they did that a lot, and they have the right technology stack as well to do, and they take time and a lot of money to analyze your code pieces by pieces, trying to find attack vectors, replicate attack vectors that were discovered by other security researchers as well, them in other protocols. And that's their job, to analyze everything. And once that is done, usually the protocol being deployed, and what you do, you add grants and bounties for security purpose. And the purpose of that bounty is, we want to reward the people that find security issues and that report them to the team in a correct and efficient way for them to be able to mitigate it before it is exploited. And we want to incentivize and reward those security researchers. The bounties are a very needed thing in terms of security, especially in DeFi. Audits as well, you need to have the right auditing company as well, because they're not all equal at all. And actually having a bad one is just useless. There are a limited amount of people that have the right skill set to be able to do that efficiently. And so that's a matter of trust and reputation as well. But this is the process that we go through to, it's never a sure thing, but it's the best effort that we can do for security of for smart contract. And that's the first thing. Of course, you have the interface as well. You have all the OPSEC of your team, a lot of things, keys, admin rights, everything, all that has different challenges and processes, but usually the subject is around smart contract.
Yeah, I think my one last question is that you already briefly touched on. It's about like asset security and maybe even involving auditing and to bring into the protocol. So would it be possible to give us a little specifics on those topics?
Yeah, you mean, so what kind of insight are you looking for?
So just like assuring asset security, like the money on the protocol. Is there a certain way to provide transparency or like assurance, stuff like that? Yeah, definitely. So transparency. And the first thing that I mentioned is like the contract are verified on an insert scan, so people can know. They know the code that is executed through the EVM, so they can check if it works the way they want it to work. That's the first thing about transparency. Then you have a lot of tools and things that are built currently that are actually helping to analyze what is going on those smart contracts, how the liquidity is moving, if some kind of invariant are respected and in a live and production environment. We built internally tools to analyze the pools that we're integrating, because we want to provide different kind of statistic. And it actually happened that sometime we found something quite interesting, like a negative interest rate on something that should not be negative. And we reported that to the team. And 1 week later, there were post-mortem quoting us, like saying like that there was actually an issue in the pool and some liquidity was leaking. I mean, it's a more complicated subject than that, but there are tools being developed currently to monitor things. That's about transparency. Wait, the second one was what? It was transparency and yeah, the assurance of assets. So you can briefly touch on,
yeah, definitely. So insurance. There are insurance protocols. There are normal insurance as well. And sometimes your protocol is including some kind of insurance funds. So you have different way of tackling that. And and each have their pros and cons. But for example, if you take Aave, they are a credit line protocol, basically. They provide credit lines, and they can have a bad debt in some cases, and they have funds that are used in different at different events to actually repay that bad debt and be solvent. That's something that you create in terms of tokenomics, in terms of inertia, in terms of you build a treasury with the DAO, and that's actually something that can then be allocated to try to insure some pool. So the insurance protocol, they usually work in a similar way than insurance, but with the decentralized fashion. So everyone can provide liquidity to insurance, that kind of thing. But they are a protocol by themselves, so they are subject to risk as well. You have kind of traditional and more centralized insurance, but they usually do not interact too much with decentralized protocols. But yeah, I think that's something that is being built progressively. And we actually had question on that aspect whether we're plans because we don't have an insurance yet. And actually we will probably have both of those approaches. We'll probably have other protocol ensuring some pools. The cost can be shared between different actors, APWine or the protocol that is integrated by APWine, depending on the stake of the users and the people providing liquidity that want insurance. And we're also building the mechanism that allows the treasury to collect some funds in terms to anticipate some eventually bad events where they can act and repay upon certain condition or that kind of thing.
Super interesting. So I think time has passed. Thanks, a big thank you to you, Gaspard, to APWine. It was an honor to have you on stage tonight.
Thank you.
So on behalf of Blockchain HEC and our prime sponsors, Stake Capital Group that you know well, and PwC, so we would like to thank you and the audience for having us. And so let's keep in touch. And if you want to have a last word, Gaspard, the floor is yours. And, yeah.
Thank you very much for the invitation. Yeah, sure. If you have any question, you want to reach for more question or discuss about different subject, the space is usually very open, and feel free to DM me on LinkedIn, Telegram, or whatever channel. I'd be happy to answer. Yeah, we would be very happy to share our insights with the community, to meet them and exchange this stuff, because I think it's still a very new subject. So we have the need for all the brains, and we're very happy to share our experience there.
Thanks a lot. And you're supposed to take your flight to Bogota tomorrow, no? Is it? Or?
Yeah, I have a lot of things to do, but I have a flight at 6:30 in the morning. So
wow. So big thank you for being with us and have a good and a safe trip.